So it's the holiday season, a time marked by green and red decorations, but if you're looking at the stock market, all you see is red. We're gonna talk to you about how much pessimism is out there, share some stats you probably haven't heard anywhere else, and lay out a little bit of roadmap in terms of how to evaluate your emotions, your portfolio, and get through what is admittedly some trying times for the markets. So let's start with the setup, who we are as investors. The reality is, as investors, we're hardwired to fail. It's just the reality of the situation, whether it's how we're wired, it's how the markets act. And there's really three components to that as you walk through that I wanted to share with you before we get into really the current state of the markets and where we're at. Number one is we are programmed, there's been plenty of books, there's a great book called Triggers that talks about this, to expect things to go as expected. I don't know about your life, don't know about your time in the markets, but as for mine, that's rarely the case. How I think my day is gonna go when I wake up does not define it in its entirety. Things come up, and what the author of Triggers talks about is that rarely elicits a positive or constructive response unless we're really ready for the unexpected to occur. Number two is markets do anything but that. If you look at the market's average return and you go plus or minus a couple percent, that's only happened 9 times in the last 91 years. So less than 10% of the time, those aren't odds anyone I think would be strong, is the market going to act as you expect it to act? Finally, the part of our brain that gets triggered by mortal danger is the same part that gets triggered by losing money. So here we are thinking things will go as expected. The market's almost guaranteed to not go as it expected. And when it doesn't, we're wired to freak out. That's the condition that we're up against. And if you look at pessimistic levels today, people are freaking out. Fear and greed index, you can Google this. It's currently at a 5. 1 is people are losing their minds with fear. 100 is they're way too optimistic, and we're sitting at a 5. So again, this is that buy or hold low moment that everybody knows how to parrot, but is so much more difficult to live. Even if you look at the investor sentiment index, the levels of pessimism compared to the levels of optimism are at near historic spreads, with pessimism, of course, winning the day by far. As a result, people, are not only fearful, but they're rightly confused. Deutsche Bank put out a piece this week that noted that asset classes with negative returns has reached 90% of all global asset classes. So when you're looking around and you're looking for shelter, even amongst something like treasury bonds, they're still down year to date. It's nowhere to be found. And when you take that type of fear and that type of a confusing setup, people are obviously growing frustrated. That's why we keep telling you, find a win. Find something that you can hang on to. If your strategy is solely predicated off posting total returns, be it the brilliant manager or the secretive, effective black box, you're not going to do well during times like this. And if you're in the distribution phase, it could be fatal to your financial longevity. That's not hyperbole, that's real. And that's why we stress the importance, again, of structuring things in a way where you can find a win. Is the level of ownership you have holding steady or going up? Is the income stream you have holding steady or going up? And if it is, then you can wait out the total return, the value of the portfolio. Let me be clear. We care about it. It's important. It's a critical piece, but it's a lot like looking at a scoreboard in the middle of the game. You need to be aware of it, but it does not dictate necessarily the play ahead of you. It's not how you win the game. That's about the blocking and tackling, if you will. Put another way, that's about diversification. That's about income generation. That's about building a sound overall strategy and mapping it to your unique situation. And that's why we continue to pound the table. The firm's growing, we're bringing on assets, and let me tell you why. It isn't the reality of most places out there, and people are finally waking up to the consequences of it. We got into this business to see people succeed and do well, and that's why we share these messages. Let me cover some common questions and concerns we get real quick. Number one, if it keeps going like this, I'll run out of money. That is mathematically correct. It is also practically not feasible. Unless you're in Bitcoin or some individual stock that might go to zero, that's not how the markets work, right? They will go down, but they don't go down forever. They will go up, but they won't go up forever. And so again, that recency bias that we all can have that tells us what's been will always be, can be a very powerful thing. It can drive us to some emotionally based decisions. But again, avoid that urge. And again, keep in mind, speak it out and realize that, yeah, that's a fear, but it's again, not one grounded in reality. Secondly, again, we've shared it in October, a 60-40 portfolio. Again, we think you can do a lot better than that, but just speaking about general diversification, it's only posted a negative 5-year return on a rolling basis, less than 1% of the time. Even just the S&P 500 on a rolling 5-year basis has only posted a total negative return less than 10% of the time. So all that's just to say, if you give things time, it's going to work out most of the time. If you add some diversification to that, it really does buoy things up and get you to a better place. I'm going to leave you with this. It's a poem that my grandfather made sure I would remember during his last days. The poem If by Rudyard Kipling. I wanted to read a redacted part. I've shared it with you before because just like him, I think it bears worth repeating and remembering and reciting. Last time I shared it to you was January of 2016. There were concerns about China. There was concerns about a recession. There was concerns about slowing earnings growth. There was concerns about the market having dropped more than 10%. And most of you probably don't even remember it, which goes to speak to the fact that given some time, we get through things and we move on. Here's that poem if you'll bear with me. If you can keep your head when all about you are losing theirs, if you can trust yourself when all men doubt you, if you can wait and not be tired by waiting, and so hold on when there is nothing in you except the will which says to them, hold on. We wanted to share those real stats, real info, not just give you cliches, but something that, again, has been said before, but is true and is part of the process is hold on. Know we'll get through this. Certainly don't let it wreck your holiday season. And with that, we want to wish you all a Merry Christmas. Thank you for your time, attention, and for those of you who are clients, your loyalty.